joining us for today's coronavirus webinar special. I'm delighted to have a very good representation right across the industry. We've got an expert wholesaler, an expert consultant in financial services, one of the leading support groups for independent brokers in the whole of the UK, and an award-winning Insurance Times independent broker. And you can see all the names there in front of you, so I'm not going to do any introductions. Today, we're going to tackle the big questions, which you're all desperate to know about, which are going to be the clients. We're going to get a good view of how clients are being dealt with by our broker panel. We're also going to talk about remote working, the implications for that with staff and property costs and workspace. We're going to talk about business interruption and the lines that could be affected. We're going to also talk about the market. Could this be the start of a hard market or not? And the effect on rates. And finally, reputation. There's also going to be a chance to ask questions, which you can type in, and then we will try and answer some around about the halfway mark. And also there'll be some polls as well at the end. So we want you all to get involved. So that's the layout for today. So without much further ado, let's just jump straight into the action with the first question, which is going to be around client issues. All of you have clients impacted by coronavirus. And let's go through each of you and find out what are the main concerns you have with your clients around what's happening at the moment. Let's just kick off randomly. Let's just kick off with Ashwin. What's your primary concern here?
Okay, welcome Saxon. Thank you. I think in two parts. First of all, post-lockdown, what are we going to do with our business and are we covered? That was the first question right across the spectrum, irrespective of size of business. And then the second question that has arisen straight after that, with the cover issues that we can talk about in a moment, is what can the insurance companies do? What can you do to help us with regards to changes in our business model? And secondly, with the premiums that we're currently having to pay, are we going to get premium holidays? Will the premium providers, the finance providers be of assistance? And or can the insurance companies that are on direct debits, can they be of assistance? So those are the two fundamental starting points. One, are we covered? And secondly, what can I do about my changing business model? And will insurance companies and you help out with regards to the payment of premiums?
So turning to some of the broker panel here, let's just turn to Matt. Ashwin mentioned there about the concerns that clients, they may not be covered, they may have concerns about being covered in this difficult period. What's your take on that?
So, I mean, as a wholesale broker, we are basically the go-between between the insurer and retail. So we've got to be there. We've got to be there for the retail client. Questions that are going to be raised. There's obviously a lot of questions asked whether cover is in place or if it isn't. Underwriters or insurers are being a little bit vague about an actual answer. So we've got to manage expectations in that respect. I mean, if we go guns out and say, yes, it's all covered, then we've got problems ourselves. I think we've got to leave that up to the courts and the insurers and their claims departments to decide.
So turning to you, Simon, what are you seeing at the moment with your customers in terms of their requests for claims related to the pandemic, and how's it being dealt with by the insurance providers?
So I suppose we're seeing a mix depending, it's very much sector driven. So I think if you're in clients that are in potentially the retail sector that isn't open, or the leisure sector, then those clients are, have different concerns perhaps than maybe some of the manufacturing and construction clients. Quite a number of our manufacturing and construction clients either haven't closed or have continued with reduced workforce, etc. And obviously some of those, asked initially, were they covered for this, but potentially some of them haven't actually had any losses from this. The leisure clients and hospitality sector obviously is a completely different ball game, because that's been shut, and they're in quite a difficult position. So we've spent a lot of time understanding the wordings. We've taken legal advice, we've got barrister's opinion, and we've been working through with our claims teams to challenge some of those wordings where we believe that they are ambiguous, concentrating on those and doing a lot of communication with the clients. I think I think the key thing that we've learned is, clients, particularly if your business has been closed, the days drag, so they want to know what's going on almost on a every other day basis. So being able to up your communication and keep them in the loop about what's going on has been absolutely critical in that, even if perhaps there isn't necessarily something happening. So yeah, that's been what we've been preoccupied with, and we've turned some of our sales teams initially into sort of handling just queries to enable our guys to carry on doing some of the day job that we've had to do as well.
And Simon, looking at what you've done, as you're communicating, you're trying to handle the queries in an optimal manner. Looking at what's going on here, you're going to have some clients, especially in leisure and hospitality, who will be looking for their claims paid, and they will be struggling to have their claims paid. Are they kind of understanding of the broker's position and the fact that the broker's trying to get the claims paid from the insurer, or are they kind of somewhat blaming the broker? What's your view on that?
No, I think at this stage, they're working with us. I think it's down to the communication that we're doing. Some clients, we've had notes from customers saying, thank you for the update. You're doing a great job. Even if you don't achieve what we're hoping you will achieve, we know you've been trying your hardest to do that. And I think, that's all you can. That's all you can do. And I think being very open about what you're doing with your challenges, how you're doing that. These people want answers, and obviously people who have no hope of getting anywhere, you've got to be dead straight with them straight away. So you're only talking about a relatively small minority of people that fall into the category of could potentially see something out of this. So it was important to get the messaging out early about, we thought there was no cover in these particular areas, and then concentrate on the areas where we think there was some ambiguity and work with the clients on that.
And Ashwin, what are you seeing from your support group? You had a good outline there from Simon about how he's dealing with his clients. What are your support members from Brokerbility? What are they saying to you about some of the challenges they're having with insurers over the current crisis?
I think it's interesting what Simon has said. I think in the majority of cases, the trigger was the announcement from the Prime Minister and the Chancellor just before the PM went into hospital, when he declared publicly in the 5 o'clock update that he'd had a meeting with the ABI and that the public authorities clause would now kick in, and therefore businesses could now make claims. And I think that was done on a Tuesday at 5 o'clock. And I think from Wednesday onwards, Saxon, all our offices were inundated with phone calls from, I would say, a very broad spectrum of clients, customers across the piece, because as far as they're concerned, that was a mandate from the government that the public authorities clause would kick in, business interruption claims could progress. And really from that Wednesday onwards, I think the entire group have been busy shielding calls from a number of clients. Simon's absolutely right. There are some sectors who are directly impacted. There are sectors who are not necessarily impacted, but of course that still doesn't stop them asking the question, does my policy extend to cover what's going on? Subsequent to that, I think there's been issues that have arisen with regards to supply chains and customers being paid. It's then getting on to rents not being paid by certain tenants, by landlords, and therefore property owners are now asking questions, am I covered for loss of rent? And then the whole mincing machine just continues to go on and on. And obviously this is not necessarily been helped by a lot of national and local publications with regards to policy cover. And then obviously the snowball has started with the class action groups that have sprung up, and insurer wordings are being looked at. And just one final thing, I think Simon again raised the issue about policy cover, making comments as to whether cover applies or not. We're taking a bit more of a conciliatory position at the moment. We're not declaring necessarily whether cover applies. We're leaving that for the insurer to determine, because they've all taken legal advice. And I think the advice that we've taken sometimes either contradicts the advice we've been given from insurers who've taken advice at the highest level. And we're a little bit circumspect as to whether we should be making declarations of cover or otherwise. And we're letting the insurers predominantly control communication for us, and we're in constant dialogue, and I am anyway, with the top markets and to find out what their position is. And I think any broker out there should be a little bit more careful in just declaring cover doesn't apply. And again, I'm sure we'll come on to the unintended consequences of sloppy underwriting, boilerplate clauses that have crept in. And it's now up to the broker to read individual policies to understand the extent of exposure or otherwise.
Right, so you've got two different situations I'm gathering there. Ashwin, you're kind of relying on the insurance to ultimately make the decision on the claims. Simon's taking a slightly different approach. He's working with legal partners there to try and, where he thinks appropriate, try and push the claim forward. So you've got two different aspects. But looking at one thing, do we agree then, all of us, that in some cases there are some insurers who are, how would you put it, maybe not behaving in the best interest of the customer? Do you think that's fair to say? Not all, but some insurers, from what you've seen. What do you say to that, Matt or Simon?
Yeah, I'd agree with that.
Yeah,
that position.
Sorry. Yeah, I would say there's been there's some insurers just a little bit non-committal at the moment. I think maybe some of them are waiting to see how it pans out. Maybe waiting for other insurers to take the lead, just to see how it evolves.
And Simon, what's your view there?
I think also, I mean, in a situation where you've got the regulator deciding that it has to go, that they have to go as a matter of urgency to the court to get a declaratory judgment that the FOS and the regulator can use, I don't think it's just, in the nicest possible sense, a panel of, you know, market practitioners who think that there's an issue here. I think the government thinks there's an issue here. Otherwise, they wouldn't be going to court. And so I don't think it's controversial really to say that there's obviously a degree of ambiguity here, which is regrettable. And I personally think the FCA acted pretty promptly and hopefully effectively to get into that argument.
Because I've heard from some brokers have told me privately that the policy wordings they've looked at on some of the insurers, and you might say some brokers would say this, but these are brokers who have looked at other brokers' cases. They've said to me that they really do feel that these claims should absolutely 100% be paid. So, you know, it's, as you say, there's a lot of ambiguity out there. What impact?
I think, sorry, Saxon, if I just add on there, I think that some of the insurers' own staff believe that they should be paid. And I think that's where, you know, I think there has been definitely some ambiguity. You know, I have seen correspondence where clients have asked for confirmation of whether there is cover applying, and the insurer has confirmed. Maybe not necessarily, you know, if you were in a court of law, you could twist that, but the intention is that they're saying that if that premises was closed by a public authority, that they would kick in. And, you know, so there's a difficult situation there, that then you've got the claims department saying, well, actually, no, it's not covered. So that does put you as a broker in a very difficult position. If you've got an insurer that you go and ask the underwriter the question, and at the end of the day, it's the underwriter that puts the contract together. You have the contract with the underwriter, and then suddenly the claims department are looking at it slightly differently. So I think in those scenarios, I think there is an issue, and, you know, we need to stand up, and otherwise what's our role?
Absolutely. It's a real there's some real tension there. If you're the customer, this is a question for anyone on the panel, just taking what you said, Simon, because obviously it's a real concern, and Ashwin said as well, for the customer. If you're the customer and you're not getting these claims paid, and they're not paid, and Peter, is there a danger that the customer might just say in the future, look, you know, I don't need business interruption, I don't need X, I don't need Y, I'm going to scale it right back down, because when it comes to the crunch, my claim's not going to be paid? Are we at risk of this happening? What do we think?
Can we get a little bit of clarity here as well, Saxon? We don't want to run away with this. First of all, we're talking about, as I said earlier, it's not, I mean, pandemics were never intended to be covered. And I think we should all agree that that start
I agree with that.
is very dangerous. And I think we've all uncovered, for those of us who are practicing insurance, where clauses are now being looked at in granular detail. And that's when cover issues have been exposed. So I don't think brokers, and I'd be really interested to hear from others who are not party to this panel at the moment, because who actively looked at the particular clauses? And I think we've all unearthed some sloppy underwriting, some ill-disciplined extensions, and possibly boilerplate clauses, which are now beginning to hurt the sector. The second point, Saxon, is the relevant sections we're talking about, either denial of access or public authority clause, both have inner limits within policies. And then the third point, just finally, please, is these losses have also got to be substantiated. And I think that's going to be the next big challenge, assuming policy liability is accepted by any insurer, depending on where the FCA's journey goes. But once you've established liability, proving the loss and or the mitigation of claims is going to be the next big hurdle, because if the limits are quite limited and it's in the aggregate over the period of indemnity. And with the lockdown easing that is being introduced gradually, the questions will be asked by insurers legitimately. What have you done to mitigate your claim? Have you taken advantage of the government relief? What have you done about being innovative about your sector? And was your premises part of a larger building that was in forced closure, or was it specifically that you chose not to trade? So I think there are lots and lots of questions yet to follow. And again, I would just echo that claims departments, not just insurance companies, but within brokers, are going to be very, very busy trying to interpret the definition of policies, and also the application of how claims are going to be managed going forward. And that is a task and a half. And for anybody that's got involved in any business interruption claim, you'll know how complex it is. But when the limits are restricted to, let's say, £100,000, it's going to be quite challenging unless you literally pay the 100,000 and do it either ex gratia or just pay it on the basis that it's going to be too difficult to adjust the claim.
Right. Okay. So and Peter, do you have a take on this? I know you take a particular interest in the claims that Ashwin's talked about. Do you have a take on that? Whether this is there's a new kind of process coming along whereby the actual quantum of the claim is the next big thing if it's accepted?
Well, I mean, it's clearly going to be a huge, a huge exercise, and this, I mean, frankly, always happens in major insurance catastrophes. This is nothing new. It just happens to be an unusual catastrophe. I think an overall observation I'd make is about the sector, and obviously we see the sector, we see the insurance broking sector through, as it were, as clients, looking through them to clients, to further clients. I mean, I think the insurance broking sector has responded pretty well, to be honest. And I think it's showed, I mean, a lot of the operational resilience in the sector has been very impressive. And has vindicated a lot of the work that's been done by the sector and by the regulators to get into a situation where a major catastrophe could be responded to. But I think to Ashwin's point, I mean, a lot of the stuff that's coming out now is going to be very technical. It's going to be very and rely a lot on lawyers and intermediaries and insurers and regulators working together productively. And I think that the immediate future will sort out to some extent the sheep from the goats in the sector, between businesses that have a high degree of professionalism and a lot of people within them who are highly professional, highly knowledgeable about these technical areas, and businesses that aren't, and intermediaries that aren't in such a good position. So my response would be, I think it's going to be a huge exercise, and it's going to make a difference whether you have in each of the intermediaries people who can deal with this level of complexity and very large numbers of claims.
And I just want to thanks for that, Peter. That's great. I just want to move on to the next topic as well, because I know that we've only got an hour, and we've already talked on one question so far. So the next question, which is a really interesting one, about the implications for employees in the workspace with coronavirus crisis. As we all know, a lot of us nearly all of us, everyone practically is working from home, which has been quite successful. Do we think this could be a big change into the working ways, not only of insurance broking staff, but other companies, whereby more and more people now will be able to work from home, and the implications of that on having head offices and property spaces. So what's your take on this? Do you think this could be, Simon, for example, do you think this could be a case now where there's more home working for staff, or do you think we'll return to the old normal?
No, I think you will find that there'll be a change. You know, it seems crackers that, you know, people are travelling, you know, an hour, 2 hours to go to an office to do the same job that they can do in their back bedroom. However, I think what you'll see is a mix of stuff going forward, because I think people do still need the face-to-face interaction. But I just think it will just be a change. You know, there'll be, you know, people will split between the office and potentially working from home. You know, some of our staff are literally desperate to get back into the office because they're not getting the social interaction. And we've got, you know, for example, we've got one guy who lives on his own, and over Easter he didn't speak to anyone for about 6 days. So, you know, it can be quite isolated if you are working from home. I suppose at the moment, well, until today, the golf club's opened up again, but there hasn't been any distractions for people to do anything else bar their 1 hour, you know, bit of exercise a day or whatever they want to do. You know, once things start to happen, I don't know if, you know, I think things will start to change slightly, but I do think there's a new normal coming.
And Ashwin, do you think that could lead to companies eventually, the cultural shift, maybe cutting overheads by reducing property space because more people are working from home? There's more of a mixture of working from home, working in the office, and you see a very sort of big change in the commercial property market, and also the insurance implications of that. What's your take on that viewpoint?
I think Saxon, let's get a little bit real. The world is going to change. I think anybody out there that thinks we're not going to change dramatically as to how we operated pre-crisis to post-crisis is a little bit behind the curve. I think this is going to take all the board members across the group, for every company, whether in insurance or otherwise, to revisit their business models. They're going to be looking at the whole issue of customer journey, how customers want to interact with you. I think it's going to go one step further. It's not just about office space. It's about staff capability, upskilling, reskilling. I think the whole position of offices and the way we operated is all going to change significantly. I totally agree with Simon's point. There are vulnerable staff who definitely need the exposure to other people who are missing, and not everybody is blessed with space at home to work, either with issues with either childcare facilities and or space, which I think is also a critical issue. But I think this morning's Stark interview, or last night and this morning, with the Chancellor, who is now looking at probably the deepest recession in our memory. And I think just to get the debate further fueled, we have dropped 2% GDP in the first quarter, but 5.8% in the month of March. And bear in mind, the lockdown was only for a week in the month of March. It already suggests that we were on a downward spiral anyway. And from the analysis that was been discussed this morning, we're looking at a 13 to 15% drop in GDP for the next quarter. Therefore, we are heading for a recession. And a recession means that businesses are going to have to revisit their model. And something that we're working on is something called resolve, reset, and redesign. And what I mean by that is, when this issue is going to get resolved, all businesses are going to have to reset their priorities and redesign their business structures going forward. And that's going to have to happen, unfortunately, this side of Christmas. It is a stark reality check for everybody. And if board members are not looking at their business models currently, then I suggest, you know, it's something that will be going to haunt them in sort of months and years to follow. The whole business model is going to change. We're seeing vast redundancies across other sectors, whether it's airlines, tourism, restaurant, goodness, hospitality. This has got a long, long way to go. And that it will be, I think, negligent if plans were not being thought of. The next point you ask about commercial property, it's something, again, where we're very alert to. Obviously, a lot of tenants are not paying their rent. And I think the mood music at the moment suggests that the tenants are going to ask for their rents to be aligned to turnover. So I think that's that's going to be the next big issue coming for commercial landlords. And commercial landlords are going to have to adjust their models themselves, because they can enforce the payment of rent, but they've got to have a tenant in business to pay that rent in the first place. So I think there's a lot of pressure about to come on to commercial properties, and I think you've seen with Intu and Hammerson's where they're always suffering with that.
Brilliant stuff. Thanks, Ashwin. And obviously we had some questions now coming in from our lively audience, and I'll pick one out that's related to this. This is from David Stewart. Hello. How are companies considering reacting to the impacts on health and safety, mental health issues created from colleagues working from home? Anyone got a view on that?
Yeah, I mean, go on, Matt.
Yeah, if from I can only speak from Direct's own sort of viewpoint. I mean, the interaction that we've had, not just from senior staff, but CEO, board members, everyone's played their part in getting the whole company together. Whether it's a quiz night, there's various different schemes that we've run. Whether it's charity fundraising, we've employed a personal trainer. We've each of us got weekly sessions with him. And it's initiatives like that I think have kind of helped our own situation, and bringing people along, which is a tough time. And like Ashwin said, some people, it can be quite lonely working at home at times. I mean, the first week that we worked at home, the kids were still at school, and it was, a quite lonely place. And that was just a week. It's a little bit different now. There are different challenges with the kids at home now, whether it's being asked to have a lightsaber fight or something like that. But different distractions. But yeah, obviously, companies have different ways of getting their staff through.
Brilliant stuff. I've got another question.
In the, I was just going to say, I mean, in the accountancy market, we're in a large firm of accountants. Of course, we're full of introverts. So actually, being alone with a spreadsheet is actually quite a positive thing for a lot of my colleagues. But in a market like insurance broking, which is full of extroverts, it's obviously a much tougher ask. And the more serious point I was going to make is that I think that a lot of firms, I mean, we have 3,500 employees, and I think, for example, we are trying to be as careful as we can about people's physical well-being. Simple things like, whether you've got a proper chair at your desk or not. And I think we're trying to do that, but I hope I'm not saying anything dangerous here, but I think we're miles from the routinization of this. I think we're miles from a process whereby we're actually checking that people aren't getting back trouble and doing something about it if they are. We would, in the office, we'd do it because we can look at the chairs and say, that isn't right. But here we can't.
And Peter, since you're talking, I've got a nice juicy question, which should be right up your street.
Yeah.
What do you think will be the impact on broker M&A in the short, mid and longer term? That's from someone who's piped through that question. Broker M&A, what do you think the impact will be?
Right, well, okay, so we're moving into probably the hardest market, certainly the hardest market for 2 decades, and probably the hardest market, possibly the hardest market for our working lifetimes. Because on top of the casualty opioid crisis in the States, and the fact we've been running a soft market for many years, we've now got a 100 billion event out of COVID. So we're moving into, we are going to be in a very hard market. Now, typically, hard markets are good for brokers, right? Because, as I said earlier, there are greater returns to professionalisation, and also, of course, commissions go up. To set against that, they're not hard markets are not necessarily so good for MGAs. They're probably good for some for the same reasons, but for others, they may struggle to hold on to the delegated authorities. So in the short run, and I think we've already had some evidence of this in our account, if you may see some distressed MGAs, and I have seen 2 distressed MGAs in the last 3 weeks. But generally, I'd have thought if I was running an insurance broker, I would hesitate to rush back into the M&A market, while the fundamental value of the business was likely to be going up quite sharply for the reasons that I've said. And also at the moment, of course, right now, it's almost impossible to execute a due diligence exercise anyway, because you can't get on site in any serious way. So I think in the short run, distress in some parts of the MGA market. I think in the medium term, probably a movement back towards active M&A, and I think a lot of money to be made by successful professional insurance brokers as the whole market pushes through in the next 2 or 3 years.
And Peter, is there a possibility that the pandemic could reverberate through to the debt markets? We all know a lot of brokers being acquired by private equity backed.
Oh, for sure, yes. And actually, unfortunately, this webinar conflicts with another webinar that we are currently running with some colleagues in the private equity space. But there's no question at all that as lending markets squeeze because of credit losses, the private equity model will, will have to concentrate on existing investments. So I would expect there to be a bit less buying push from the PE market over the next year or two, and which would be another reason, I think, for brokers, thinking about selling on some kind of time horizon to hold their horses.
And so I've got another question related to that. Here's a nice juicy one for you, Ashwin. Will the consolidator model survive the crisis and is inherently flawed? Someone's piped through that question. I know this is a topic that is close to your heart. What do you think, Ashwin? Can the consolidators come through this?
No, I think just to follow up on what Peter's just said, I would go one step before answering this question. What was a key driver for the consolidators to become consolidators? What was driving their M&A activity? And my current position at the moment is you need to look at why you were looking to consolidate, why you were looking to buy brokers, and why brokers were looking to sell. And in many ways, if those fundamental principles haven't changed, I don't necessarily expect the M&A market to slow down anytime soon. Having said that, I think the stronger and the more profitable and the more organized businesses will attract greater interest. I think the run-of-the-mill vanilla broker without specialism, niche schemes, etc., will perhaps be the ones that Peter refers to kick the ball into the long grass for a little while. I do not see necessarily, if the drivers of the fundamental change for M&A haven't changed, why should that get any less? The second point is, whilst capital has been available and more capital will become available, interest rates have been fairly benign and have got further and further behind the curve. And if the business model does stack up, I genuinely see profitable businesses being very attractive. And it depends on as I say, the drivers, and have they got, sorry to use the word balls, but have they got the tenacity to see through the level of conviction that they've signed up to. So I don't necessarily see that's sort of being slowed down, but also to start a due diligence from scratch now would be very, very difficult to have that level of interrogation that you would need. So I've got a mixed view. To me, if the fundamentals are still the same, that should not deviate from your plan. However, if your fundamentals were incorrect from day one, then I do see a weakening in the activity of that space.
Great stuff. I've got some really good questions piped through from the audience watching, but I will return to them maybe a bit later. But I want to just get through some of the key questions we had set out beforehand on the agenda, because we are rapidly going through time. One in particular, which I think is really interesting. We've talked about business interruption. What other lines here are exposed? And let me give an example. I was chatting to a broker the other day, and this broker was telling me he thought the care homes and people in the care sector were particularly exposed with this coronavirus crisis on a liability aspect. There could be real claims coming through there. So, apart from BI, what other areas can you see that could potentially be exposed in this coronavirus crisis? Does anyone have a view on that?
Can I start, if I may?
Yep,
I think BI is obviously the sort of step one. I now see the big issue following on from this is directors and officers liability. I think you're going to see a lot of activity there. Credit insurance obviously has been publicly quoted this morning by the ABI, and how companies are either not paying. I think you're going to see some tension there. I think you're going to see employees' liability claims and public liability claims potentially on the increase. I think you touched on it earlier with working from home. I think most businesses are going to have to carry out home-based risk assessments, whether it's chairs, whether it's capability, whether it's technology. So I think you're going to see a potential beginning and creep in terms of employer responsibility. We touched on going back to the office, Saxon. You've got to have enough first aiders at work. You've got to have health and safety, in and out, coronavirus cleansing. I know, for example, in my office, our cleaners are all furloughed. Therefore, you need to start a deep clean. How are you going to segregate? I think potentially a lot of areas of business are going to come into play. The next one, of course, is cyber. Now, we do know the take-up of cyber has been limited, but of course, most businesses now transacting business on the net and online are very much exposed. And this is phenomenal ground for the potential evil individuals out there to take advantage of the vulnerabilities of systems. So I think a lot of areas are going to come under greater scrutiny. This is not over by a long chalk.
So some good areas outlined there by Ashwin: credit insurance, D&O, ELL, and PLL, cyber. Matt, do you have a particular view, picking out any one of those or some others? Do you have a viewpoint on the exposed lines?
Well, I think, like Ashwin said, I think cyber is a particular issue. It seems to have already been ramped up with just what comes in over email. I mean, for us at Directs, you know, the sort of insurance that we place, or the clients that we have in the construction and waste industries and haulage, it's been affected in various sort of levels, but I think over time it will probably be ramped up somewhat. But in terms of what Ashwin was saying about, you know, people working from home, I think that's a particular issue as well.
And moving on to the another question, so we are going through quite rapidly. This is a really, really good one. The hard market rates, a very difficult one to predict, very difficult one to answer, but let's give it a shot. What is going to be the impact on the rating market from this coronavirus crisis? Could this finally herald the start of a hard market? And how will clients take it? Simon?
Yeah, I think we're already seeing that anyway. I think there's a lack of sort of new business activity on behalf of insurers. I think they've switched some of their new business underwriters to just get the renewals out the door at this point. So I think they're then taking the opportunity to try and push some rate. I think you'll probably see that compounded by some clients dropping some of their estimates, etc. So I think, yeah, you will see rate increase when you actually look at a like-for-like risk.
But if I'm a customer and I'm being very hard pressed at the moment, and there's increases in my premium, how do you think they're going to take that?
Well, I think naturally, I think there's going to be questions, and it will come back on us to try and come up with a better deal. I think we'll find excesses will probably raise in order to get the premium down. I mean, that's the way it normally goes in hard markets. Obviously not had one, or a substantial one, for quite a while. But sort of touching on what we talked about earlier in terms of negotiation, I think the face-to-face negotiation, it will be more important than ever. I think over the last sort of couple of months, we've worked on Zoom chats and various sort of ways with negotiating with underwriters, which has worked to a point. But I think you can't replicate face-to-face negotiation. And I think with Lloyd's and the London market, at times it's struggled to maybe keep up with the technology that's or embrace the technology that's you know, that is out there. I think it's at times like this where sitting in front of an underwriter, you know, seeing the whites of their eyes is probably more important than ever.
Right, exactly. I mean, this could actually be a bit of a. Do you think it could be a bit of a jump start for the Lloyd's and London market to improve their technology, maybe? Possibly.
I think there's some parts to the technology they've gone with recently. I think PPL has been introduced, which I think has been a success, and that's the signing of documentation. But it hasn't been used for quoting anything yet, whether it's a renewal or new business. It's not really been used a great deal in that respect, but it's more the signing of documentation. But Possibly, it could be introduced in further afield. I don't know.
They certainly need it. I was chatting with a broker over a drink, and he was the professional indemnity broker, and it just doesn't use the Lloyd's market anymore because the technology is so poor, and he uses MGAs now, which are much slicker and quicker. So certainly got issues. But just moving on to hard market, because I know it's a big general topic. Peter, is it going to be a hard market? Will it be in lines, certain lines? What do you think?
No, I think I would be surprised if this was not a hard. I would personally be surprised if this was not the hardest market of my working lifetime.
Really? Wow.
Yeah.
Harder than 911, post 911.
I mean, there's been a long period of depleting reserves for insurers and reinsurers. Secondly, this, as we were just talking, actually, it's slightly difficult to look at any major class and say it hasn't been affected by this. You see some, so for example, the government has announced today that it's stepping into the trade credit market. Now, okay, trade credit is a relatively marginal, relatively tidal class of business, so it's not that much of a surprise. It was nationalised, of course, for 30 or 40 years. But nonetheless, that's a sign, you know, that is, among other things, a sign of a very hard market. We get whole classes drying up. And of course, most insurers have taken a real bath on the asset side. So not only are they seeing a multi-hundred billion loss on the liability side, they're seeing a drop in their asset values. So personally, I'll be rather surprised if any class was saved from the hard market. And I think we'll see something much more like what we saw in the mid-80s, early 90s, which is quite a few marginal classes drying up completely. And I agree completely with your point and Matt's, which is in those circumstances, you know, communication becomes a particular art. Having worked as an insurance broker through a soft market in the early 80s, then a hardening market in the mid 80s, you know, how difficult it is to explain to a client that something they've had cleanly and has run cleanly for years is suddenly 3 times as expensive as it was last year.
Ashwin, Peter's saying at last we are going to see the emergence of the hard market. Your view?
First of all, I think Peter makes a really valid point about balance sheet correction. I think if you look at the share price of all insurance companies at the moment, they've all taken a bit of a tanking. Hiscox had to go to market quite recently. So I think underwriters, first of all, will not be able to resist the desire to raise rates. That's absolutely undoubted. I think we've discussed previously, and Matt's made the point earlier, construction PI in general is going to be very, very expensive. So that's going to come along. And also don't forget the government still enjoy 12% of the premium. So there might be even a temptation in terms of correcting the ship to potentially look at IPT as well. Now, in terms of the hard market, I think I wouldn't say this is the hardest market I've lived in. I think I look, and possibly I'm younger than Peter. I've lived through a lot of hard markets, and I think 9/11 was a good example. And I've been betting my house and my shirt for a number of years, calling the bottom of the market, and I've lost my house several times. So we've been in a very soft market. The issue here, Saxon, is that customers have got used to low premiums. They've got used to brokers cutting each other's throats for the gravitational pull to the bottom line. Will there be areas that customers going forward, because of rising prices, would look to cut covers? And I think the broker's responsibility gets even harder as to which areas they're going to accept where the customer walks away from certain covers because of negligence claims that may or may not follow. If a hard market does ensue, I suppose the Treasury benefits from the IPT, but selling it in an environment where the economy is still yet to recover, whatever your version of shape of recovery is going to be, it's going to be a really, really tough sell. And I think the final point is the professional broker that is operated in a number of years hasn't been able to sell in a hard market. So we're all going to have to gear up as to how we sell product and safety and other areas in a hard market. And maybe this could be the beginning of the end of commissions, where the brokers now work on a fee on cases over a certain size, which, you know, Saxon, I've been pushing for. And I think from a transparent point of view and for customer point of view, that's got to be the way forward. And brokers have got to now earn their crust rather than rely on hefty commissions.
Wow, I mean, if it was the end of the commission model, that really would be a profound change to the
Well,
market.
I think now in the public interest agenda, why would not that be debated amongst thinking brokers? Because on a case where you've got to justify what you're doing for a customer, surely that's got to be in correlation to what services the customer wants to have. And I think working on a commission model basically distorts the market above a certain size. You can't do it for all cases, but it's got to be something that's got to be on the regulator's agenda, and if not, on thinking brokers' agenda.
But how do you deal with that? Saxon East Insurance Brokers receives a call from Mr. Fish and Chips, and the premium's only like £400–500. Do you really do a fee for something like that?
Absolutely not, Saxon. That's what I'm saying. I think you may have to start at maybe premiums over 50,000, depending on the class.
Okay,
I wouldn't
right.
call that on motor fleets, but I think in certain areas, and I think if brokers to start to look at their business models, should be able to cost their business model themselves, and maybe look at the sectors they want to get engaged in.
Brilliant stuff. So we're coming close now towards the end, because I do want to keep this to an hour. We're at 45 minutes in. So I think to end the last 15 minutes, let's do the poll. So you've got some great questions. And let's get feedback from the panel on the poll. And then to bring it home, we could just finish off some of the questions, because we've got a bunch of questions that our good audience have put in. So the poll, this is to all our audience. I'm going to launch a poll in a minute with 3 questions. To what extent has the pandemic damaged the reputation of the insurance industry? To what extent are the banks making life difficult for your clients? And how many of your clients with business interruption claims are struggling to get paid? So I'm going to launch this poll now, right? And hopefully you will receive it and you will get voting. So the panelists, you can vote as well. Let's launch the poll now. Right. Let's get voting then. Is this right? Yeah, we've got people voting, got some people voting in. Keep voting. 30, 40, 50, 60, 74 people voting. Keep on voting. That's great. 100, 111, 113, 115. Let's push it home. Let's see if we can get past 200. 140 people voted. 150, 157. Let's keep on going. Let's see if we can push past 200. 160, 61, 62. Looks like we're petering out a bit there. Okay, 167. Let's end the poll there. Let's find the results. So 167 of our good audience answered this question. To what extent has the pandemic damaged the reputation of the industry? Very badly, 24%. Badly, say 53% of people. And a little bit, say 23%. And 1% say not at all. So there we are. So the industry has been damaged either badly or very badly by this pandemic reputation. To what extent are the banks making life difficult for your clients? Very difficult, say 7%. But 50% of brokers voting in, I presume most of them are brokers, say that the banks are making life difficult for their clients. Interesting. The banks are really not helping, seemingly, from what the brokers are telling us. Not much, say a third. And then finally, 8%, actually 1 in 12, say actually the banks have been quite helpful. But the big message there, I guess, is that 50% of brokers think the banks are making life difficult for customers. The final question, how many of your clients with business interruption claims are struggling to get paid? Many, 47%, nearly half, say many of their clients are struggling to get business interruption claims paid related to the pandemic. 34% say a fair proportion, and only 70% say not many. So the big takeaway from that is our reputation is damaged badly. The banks are being extremely difficult or difficult for clients, and the vast majority of customers are struggling to get their business interruption claims paid. Does any of those results surprise you or anything like that, panel? Or was it what you kind of expected?
I think the banks is quite interesting. I thought they'd. I know that there was some problems, obviously, with the amount of volume, and there has been quite a lot of money that's lent. I don't know if that's just a case of it took a little while for those bounce back loans, the £50,000 ones, to sort of come in, which I think has opened it up to a number of other people who perhaps their balance sheet maybe not as good at that. I think probably the big issue with the C-bills thing is that the banks were looking for forecasts, and who fancies doing a forecast about, if you're a business that's been told to shut by the government, how can you do a forecast, because you don't know when it's going to open again. So I think there were some difficulties with that in the early stages. So I think that may be it.
Brilliant stuff. So let's go to the questions now to bring this webinar home. We've got plenty of good questions from our audience. So let's get rid of that and let's go to all these different questions coming in. The very varied in some of the questions we're getting through, but so they're going to be quite different. But here's one: is the incoming ombudsman influence undue and/or unskilled? So is the customer regulator, the ombudsman, is it? Let's maybe just leave that one actually. How do insurance companies keep the brokers engaged? How do the insurance companies keep the brokers engaged? So how do you, I guess, if you're an insurer, I guess the gist of that is, how do you keep the brokers on side, because there's a bit of tension there at the moment. How do you keep them engaged? How do you keep them on side? Are they doing enough, I guess? Does anyone have a view on that, the relationship with the insurers at the moment?
I think you've just got to keep talking, haven't you, at the end of the day? Keep the dialogue open, and keep those discussions going wherever possible.
Brilliant. And then I've got a question.
I also think it's just worth saying, I mean, earlier in the conversation, I was taken aback by, I think it was either Ashwin or Simon saying that they had experiences where at a working level, an insurer was prepared to accept a claim, but at a higher level, at the level of the company leadership, the insurance leadership, they weren't. And I mean, that is if you want to talk about sort of communication sort of strategies for insurers, that's an example of how not to do it. Okay. So, I mean, I think if there are on the, if they're on the call, some insurers wanting some suggestions about how to communicate with the insurance broking fraternity, then one start would be, clarity around what's undercover, what's covered and what isn't in some of these contentious areas might be one.
Good stuff. Good stuff. I've got a question through from Emily Kenya, who on the hard market and capacity. And Emily has asked, with regard to the hard market, do you think capacity is going to be pulled? i.e., are we going to go back to the bad old days of insurers exiting lines and then brokers having those difficult conversations? Is this a problem that's coming up on the horizon? Peter, I see you nodding your head. What do you think?
Undoubtedly, I don't think the government would have stepped into the trade credit market earlier today if that wasn't due to insurers withdrawing cover in a business critical area. And it started.
And anyone else got a view on that? The lines being pulled, back to that problem with the broker having to deal with, sort of rebroking into lines because insurers have pulled out.
I think Saxon, this goes back to the previous question. If balance sheets of insurance companies are being damaged or severely bruised, capital markets won't necessarily be looking to invest in areas which are under great public scrutiny. And I think also if lines are going to be cut, they're going to be cut in the areas that most of us can name right now. And the danger is, of course, they're going to leave certain sectors of British industry exposed. I think Grenfell was a wake-up call for the entirety of the building sector, and this issue here and now, and the availability of construction PI, for example, is just going to accelerate that. And even policy terms going from single incident indemnities to aggregate is also upsetting the markets. And it's going to take a brave capital underwriter to come in and continue to come in areas that are just being exposed. And I think if we even suggest that we start to look at retrospective claims payment like they're doing in the US, God forbid what that's going to do to investors.
Great. Thanks for answering that, Ashwin. I've got another question, a bit of a technical one from John Ludley. What's the view on the wide area damage issue? It appears that even if insurers accepted an extension and gave cover for COVID as a notifiable disease, they are then saying that there is still no claim due to the wide area issue. So I have a view on that one, a bit more technical.
Yeah, I think there has been case law that's been quoted. I think it's predominantly the Canadian most recent action that's been sort of flouted around. And I think most companies have operated on the basis of damage on the premises, and then it's a question of how policies will react. So if coronavirus was, as a notifiable disease, was found on the premises, policies will react. But of course, that's limited to cleaning only. But then it's of course the consequential side of that, which is currently coming under challenge. But I think the premises issue has been well documented, and I think something that we've debated internally as well, Saxon, is now the definition of proximate cause. And if you follow that argument, you have an issue with premises being closed down, and post lifting of the lockdown measures, will customers reinstate activity? And has that been an intervention beyond the coronavirus disease itself? So if the lockdown gets lifted tomorrow, will that close or will that shut the gate for potential claims? But will an intervention of public behaviour be an intervention for proximate cause purposes?
Excellent. Very well answered there. So thanks for answering that question, Ashwin. Another one that's come through from Mark Bishop. Are you expecting the tone and the nature of conversations with customers to change as a result of the negative media exposure the industry has suffered? What do you think, Simon?
I think, I think you're talking about maybe potentially a small group of customers who currently have their door shut and can't do anything. Obviously, a lot of the rest of the world hasn't necessarily suffered as badly, but I think some of those guys will look. But I think we need to get to the end of the process that's going through. With the FCA, that's a really welcome position that the FCA taking it to court, getting some clarification. Hopefully, it won't then run on and on and on. And then I think once that's settled, at least everybody will know where they are, and the conversation can probably change. Then, whatever the outcome of that is, either some people will pay or it'll be decreed that they're not paying. And I think, people will just move on. I think you will get some customers who would talk about it, what have they bought insurance for, particularly when the one time they'd potentially called on it, it's not there to react. But fundamentally, a lot of these clients are still today paying their insurance premiums because they've got assets, property, etc. They need to carry on to insure. And I think, it will die down over time, but there will be a niggle in the back of people's minds about small print and all those sorts of things.
Brilliant stuff. I've got another question, probably one more question. I've got a question from someone called Roger Moore. So let's hope this is the man with the golden question. Excuse the pun. And Roger Moore says, you talked about hard market. One of the key concerns we have are the service levels from underwriters are worse than ever, which means terms are released very late, with many insurers now being unwilling to offer any extensions. How do the panel see ways this can be improved? Who would like to answer that one?
Go on then.
So, from that respect, I think more than ever, I think you've got to rely on your relationships with underwriters or insurers. Something from the London market respect, you've got some good friends in the market, and you'd like to think that your relationship goes a bit further than the usual games that can be played. And I think it's up to us as wholesale brokers to make sure that the service is there, that's passed along to the client via the retail broker. And yeah, the underwriter does hold all the cards, and they tend to play hardball. But yeah, it's at times like this that you need to make sure the service is there the whole process along.
And Simon, you're going to answer.
Yeah, I think probably have to put it in a bit of perspective. You know, everyone's had to remodel their businesses in a very short space of time. You know, people, you know, who were used to sat in the office next to someone are now sat, you know, at home trying to do childcare, all sorts of other bits and bobs. These are really difficult times. So I think that's probably why you've seen insurers, you know, concentrate more on the renewal book than perhaps the new business, which has potentially sort of put a bit of an issue if you're trying to get something rebroked in a difficult market. So I think it's just where we are at the moment. I think, you know, hopefully those things will come back, but it's, you know, you have to accept it's a difficult time at this point.
Could I just also add, Saxon, and I think brokers also need to look at what they've done to invest in insurer relationships pre-crisis. And in many ways, if brokers have had an open dialogue with carriers, I know we spend a lot of time with insurers understanding their position, and we think we've got a reasonably healthy relationship with most carriers, and the dialogue has been very good. So it's down to the individual broker to what they've done to invest, because it's not a one size fits all. It's not a one insurer problem. It's not a one broker problem. It's a collective problem. And this is a great opportunity for brokers to engage with partners, and conversely, insurers to engage with brokers on a level that's never been done before. And I think there should be no excuse now for either party not to engage.
Fantastic. Well, we've hit 2:30. We've come through an hour of some good questions answered. Some good questions from the audience, some polls. I really hope that's given everyone a good flavour of some of the challenges the broking and insurer market is facing at the moment, how it's being dealt with, and hopefully you can take something away from this back to your workplaces. That just leaves me finally to say thank you very much for everyone who logged in and watched this session. I appreciate that. I appreciate your questions and your answer to the poll. And of course, thank you very much to Peter and RSM, our sponsor, and panelists for answering the questions. Obviously, thank you, Matt from Direct London Insurance Market. Thank you, Simon, as well from Romero. And finally, thank you very much, Ashwin, Chairman of Brokerbility. You've all been great. So that just leaves me to say thank you very much, everyone, and hopefully we'll do it again sometime. Thanks everyone. Bye-bye.